For more on the Saudi-Russia standoff, let's bring in our guest. Joining us now, Nansen Saleri, Quantum Reservoir Impact founder and former Saudi Aramco head of reservoir management. Maybe we were early yesterday, Nansen, but given what happened to crude prices, we thought that both sides would be forced back to the table to or maybe it was just wishful thinking, maybe to have some type of understanding that, this isn't helping anyone. But it seems like the rhetoric or things even deteriorated further in the last 24 hours. Is that a fact? And how do you see this resolving itself or not at all?
Well, the short answer is it will be resolved. It's only a matter of time because it's not in the best interest of any of the major parties, whether it's Russia, Saudi Arabia, or indirectly the U.S., to continue with the current situation. Price wars have always been part of the DNA of energy markets, especially oil and gas markets. What's very unusual, and I would say extraordinarily unusual at this time, is its coincidence with what's going on with the coronavirus crisis globally, which truly magnified the impact on the global markets. And that's why I believe that common sense is going to prevail, and the parties, whether in the next coming weeks or in the coming months, will find a way for a solution. It's not a sustainable thing, what's going on right now.
Who do you think I'll rephrase it. Will there be a double blink? Will both sides blink? Or does Russia have to? Is it about U.S. shale producers and making them feel pain or trying to actually put some of them out of business? Or what's the dynamic behind the supply situation? We understand the demand situation.
Yes, you pointed something very well. Because there are visible factors and there are invisible factors. In my opinion, the elephant in the room is the shale production, specifically the Permian and the overall what we call the shale revolution. That's really the thing that's impacting the markets. And either way you look at the conflict between Saudi Arabia and Russia. The real aim right now is to send a strong signal to the shale producers. And that mission has been accomplished. Perhaps it has gone in directions that neither party was accepting, neither Russia or Saudi Arabia were expecting. That's why I believe we will see a return to normalcy. And we would see some sort of communication, whether it's openly or through back doors, because in the long run, and even in the midterm, over the next 2 or 3 months, the current situation doesn't favor anybody. In the short run, the advantage is clearly with Saudi Arabia because they have the lowest development costs, operating costs of any producer, much lower than Russia.
Nansen, there are reports that the Trump administration is considering some kind of bailout or stimulus package that would include frackers, shale producers in the United States. Does that make sense to you? Do they need a government bailout? Could they go through the regular bankruptcy process? Is there money waiting on the sideline, debtor in possession financing, et cetera, if we get to that place?
Well, yes, that could be a consideration. The fact of the matter is, even before this situation, there was quite a bit of leveraging going on in the shale markets. According to our own analytics, between over the last 2 years, 1 out of 3 wells drilled in the Permian were uneconomic at prices of $55. So you didn't even have to see the prices drop to the 30s to see.
But from a policy perspective, would it make sense? Does it make sense? I ask only because it feels to me that these are companies, private companies, that took risk, and it's unclear to me how systemic their failures would be if, in fact, that is what takes place.
You know, I'm from the oil industry, so it's hard for me to be objective on this. Clearly, a big government intervention is not the right thing to do. I think the way forward is innovation. Only a few years ago, people were arguing that anything below $80, shale oil was uneconomic. Well, look what happened. At $40, $50, the U.S. production increased to 13.5 million, in fact, close to 14 million. Almost 9 million barrels of it comes from shale producers. That happened with $50 to $60 oil. So those companies that are super efficient can innovate themselves, can benefit from new generation of technologies, are the ones who are going to be the new leaders of oil and gas, including shale. So the answers are the companies looking at themselves and see how they can improve their efficiency. And I believe even at $40 oil, even at $35 oil, the super efficient companies can differentiate themselves.
Nansen Saleri, thank you very much, and we'll see how long, you know, everything we talk about, it's about duration. We'll see how long this lasts before these two sides.
It won't last very long.
Okay. All right, excellent. I guess I used to like lower oil prices, but you never know. Low interest rates I thought were good. Now, you know, everything's upside down.
Every coin.
Right. Thank you, Nansen. We'll see you.